Hi guys, welcome back to another video. In today's video, I'm just going to talk about how I personally grow small accounts, and this is going to be based on my own experience trading with small accounts. In a previous video, I told you that I started trading my trading journey, trading $5 accounts, $10 accounts, $20 accounts, $50 accounts. I did that. And I now do have my bigger accounts, but I still do trade smaller accounts here and there as a way to refine my strategies and also to see if I still can do it. So I've basically have done it. Let's face it, not everybody is able to start trading with $10,000 in their trading account. Let's face it, not everybody is going to start with $1 million in their trading account or $5,000, $1,000. Many people probably are going to have only $100 to start with. By the way, the broker that I use, see the link in the description box below. You can start trading with them with just $5. And currently they're actually running a promotion where they give you 100% deposit bonus. So if you deposit $5, they will give you $5 more so that you start trading with $10. If you deposit $50, they will give you another $50. If you deposit $100, they will give you another $100. It's up to $500. So sign up with the link in the description box below. So the first tip that I'll give anybody who is going to want to trade with small accounts, forget my trading system that I have here. I've done videos on this channel about this system that I use for trading from zone to zone, but it's not what I'm going to be talking about in this video. So the first thing that you want to do when you're going to be trading with small accounts is understand risk management. Guys, trading is all about risk management. Yes, it's about making money. Yes, it's about doing all the other things, but trust me, your trading is about risk management. If you cannot manage your risk, then you are not a trader. You are a gambler. You are just putting money in the markets and hoping that it gives you something. The first job of a trader is a risk manager. What you want to do is find a number. Find a number. For some people, it's 1%. I've seen 2%. For some people, it might be another number. Find a number that you are comfortable with. You say, I'm not prepared to lose more than this much per trade. That's how you start managing your account, and you stick with that rule. Whether you are making money or whether you are losing money, you need to have an idea of how much you are risking. If you lose money today, are you going to be around tomorrow to capture the opportunity that's going to come with tomorrow? That's the genesis or the idea behind risk management. You are going to be taking losses in trading, but what you want to do is take losses that do not blow your account or take you out of the game. That's what we mean by risk management. So you need to understand risk management. Have a risk management plan in place and decide how much you are okay with losing. Then the second thing that has basically helped me regarding making money with small trading accounts is actually understanding my risk to reward ratio. Risk to reward ratio, it's important. Many people just go in the market and they don't understand, or they've no idea about their risk to reward ratio. So in the end, they think they are making money when they are not. In the end, the person thinks, oh, I'm making money, I've got so many blue trades, or I've closed so many trades in the positive. But you find that at the end of the day, they are still in red because they are not allowing their win trades to actually make their money. They are just thinking that they are making money when they are not. It's because they don't have an idea about risk to reward. you need to have a good risk to reward ratio. So let's say you probably buy somewhere here, and you probably set your stop loss somewhere there. Usually, sometimes people then will aim for a 1:1, which will probably be around there. That is for a person who is aiming for a 1:1, but usually you want to aim for a 1:2 minimum. That's what you want to try and aim for. If you are going to bet, let's say $10 here, if it goes in your favor, at least you need to realize $20 profit. Sometimes people, they have their risk to reward, it's at $10, but they are only aiming for that much profit. And in the end, when these losses come and compound, you find that these small wins are not enough to cover for all these losses. So what you want is to have a good enough risk to reward ratio to begin with. So in this scenario, if you are having some of these trades actually reaching your 1:2 or 1:3, maybe 1:3 will be somewhere here. Maybe you are using 1:3 and you are having some of your trades actually realizing 1:3. Yes, you are going to have a couple of these ones that are going to hit your stop loss, but these ones are going to be covering these losses. So at the end of the day, you are actually going to become a profitable trader. Trust me, you are going to take hits in the market. It's good that you have a good risk to reward ratio plan in place, especially if you're going to be trading with small accounts. What I usually do with my small accounts is, I told you in previous videos, I enter here, I take part of my profit there, and I wait for the trade maybe to come around this area. I basically trade at zone to zone. That's what you are seeing here on my chart. So I'm basically aiming for small lot size for my entry and hoping that we actually come and reach this area. Then I realize my profit. Now, that brings me to the third point that I also think you need to be aware of. Don't miss opportunities to compound your trades. If you have a good entry here, just using the previous example that I just showed you, if you manage to get a good entry here and it starts moving in your favor, why just watch it go? Yes, previously I've been also guilty of that. You just watch it go, and of course, this trade is making money, but there were also many other opportunities to make money that you just left. Now it disappeared. There were many other opportunities that you could have jumped in and actually rode the trade all this way. If you say, let's just take this example, let's say you entered a sell there, fine, but this was an opportunity to take another sell there. This was an opportunity for another sell, another sell, another sell, another sell, another sell. So in the end, when you actually reach this zone, you actually can collect a whole lot more money than just watching the trade go with a single trade. I know of a trader who basically, if they go onto their higher time frame, this is 4-hour time frame, and their analysis is that price is going to come from here to this area here. Do you know what they do? They actually drop down to the 5-minute time frame. Now it's gone. Let me just zoom out a bit. Hopefully this is it. So they actually jump down to their 1 minute 5-minute time frame. Then what they do is, with, let me just use this, I don't know, this is one of the headaches with using MetaTrader on macOS. So what they do is they go to their 5-minute time frame. Let me just use this example. What they do is they go down to their 5-minute time frame, and at every blue candle they buy. Every blue candle they buy. Every blue candle they buy. So in the end, they have a trade. Let's say they trade there, they actually do another buy there. But of course, you need to be able to do this if you have enough equity. Respect equity, and they'll buy there, they'll buy there. As long as the market is printing blue candles, they'll continue buying. At every close of a blue candle, they'll buy, they'll buy. That's what they do. That's their own compounding strategy. And it drops here and they start buying again. They don't close all these trades. They don't close all these trades. Guess where they actually close all these trades? At the next zone here. Maybe for you this is way riskier. You cannot compound like this, because that's what they do. They keep on buying every blue candle on the 5-minute time frame. They keep on buying. They just continue buying, because their analysis is that price is going to move to around this zone. So they cannot just let price continue while they are watching it. They are just milking it. As long as there is equity in their account, it's maybe riskier for if you do not know what you are doing, but that's what they are doing. At the end of the day, you find that when they eventually reach this point, they probably have 100 trades that are open here, and then when it reaches this point, their TP, they close all those 100 points and they realize their trade. Maybe you do not want to compound like that. Maybe you don't want to compound like that. But the point is, don't just watch price go. If you are trading, especially with small trading accounts, what you want to do is find opportunities for new entries. If you are convinced in your analysis that this thing is going to move there to this zone, find opportunities in between there to continue buying. Don't just have one single trade and watch it continue going this way. Find opportunities in here to continue buying and compound. That's how you generate more money from your small trading account. So yeah, I thought let me share this with you guys. Maybe somebody might find some value with it. If you are new on this channel, please consider subscribing so that you don't miss any of our future videos. See the links in the description box below if you're looking to download free forex robots, indicators, books and stuff like that. Otherwise guys, if you have any thoughts about this, because this is just my opinion, feel free to disagree with me. Leave your comments in the comment section.